Hey guys, welcome back. I hope you had a really great Thanksgiving and an awesome weekend. Let's do a quick recap of last week's price action before we head into tomorrow's trading ranges. So SPY last week opened with a gap up to make new all-time highs, and we did find support on this 35 EMA for the entire week. So Monday we gapped up, made new all-time highs, and then dropped down to the 35 EMA. And then the next day, Tuesday, we gapped up, pushed up, made new all-time highs Tuesday, and then dropped back down on Wednesday to fill the Tuesday gap. Closed right on top of that 35 EMA, and this was Wednesday. We did drop into that gap, filled it completely, took it almost to the bottom of the implied move. So on Wednesday, if you sold 597, 596 bull put spreads, those would have closed up 100% since we did bounce right here on that 35 EMA and right at the bottom of that gap once we closed it. And then I didn't make a video for the half day on Friday, but on Friday we opened with a small gap up and pushed up. Now this would have been near the top of the implied move on the day if I did do a chart for it, but we did stay within the implied move from the day before. Hopefully that makes sense, but overall we stayed above the 35 EMA on the week, and we did make new all-time highs 3 out of the 4 trading days. So new all-time highs at 603.35, and SPX, same thing over here. We did open with a gap up on Monday. We did make new all-time highs, and then we came right back down to fill that opening gap and bounced on the 35 EMA. Tuesday, we gapped up, made new all-time highs. Wednesday, we traded down to the 35 EMA. We closed the gap from Tuesday, and the bottom of the implied move was 59.90. We took it all the way to the bottom of the implied move. So if you did sell 59.90, 59.80 bull put spreads here, those would have closed up 100% at expiration here. And then on Friday, the half day, we opened with a small gap up and we pushed up to make new all-time highs. So Monday, Tuesday, and Friday, we made new all-time highs. So SPY did close up on Friday, 0.62%. SPX closed up 0.56%. VIX down 2.95%. We are now down to 13. I don't know about you guys, but I think I'm going to go long puts this week. And we did close within the implied move, both on Wednesday and on Friday. And then QQQ last week, we did open right here. Monday, we opened with a gap up, and we got above this island top gap right here. So we got right up into the red part of that gap, and then we came back down to the 35 EMA. So we closed out this gap from above, and we bounced on the 35 EMA on Monday. Tuesday, we gapped up, and from open to close, it was a pretty flat day. Wednesday, we dropped all the way down to the bottom of the trading range. The bottom of the implied move was 505. So on that drop on Wednesday, if you did sell 505, 504 bull put spreads, those would have closed up 100% at expiration. That would have been a scary trade since we took it all the way to the bottom. But look at that, we closed about 25 cents into the implied move. So we dropped all the way down to the bottom of the trading range here. So even if you went a little bit safer, if you went one strike out, if you sold 504, 503, those would have filled completely on that drop, and we would have closed up in the implied move. So those would have closed up 100%. And then on Friday, we gapped up, we got back above the 35 EMA, and we pushed up with the rest of the market on that half day. And if you look at what happened last week when we gapped up, got pushed down, we did see resistance right around 510. So that is an important level to keep in mind for tomorrow. We closed just underneath that. This was a low volume push up, and we took it right up to where we saw resistance for the whole week. So 510, maybe 510 and a quarter is where we have resistance right now. And QQQ closed up 0.88%. VXN down 3.66%, so VXN down to 16. And we did close within the implied move on Wednesday and also on Friday. And then IWM last week made new all-time highs for the first time in 3 years. So I'm going to take it to the 5-year chart here really fast. And right here, this was November of 2021 was where we had previous all-time highs. And we did hit that. We made new all-time highs and then we pulled back a little bit. So IWM making new all-time highs last week was a huge deal. And so we opened Monday with a gap up, pushed to make new all-time highs. So we have 244.98 is where we have all-time highs now. And then you could see right away here we got a red signal and then we traded back down to the 35 EMA and we stayed really close to that 35 EMA. And after making all-time highs here on Monday, we did pull back down into that gap, but you see we did leave a little bit of this gap open, so that gives us support around 238. And then we popped back up and we closed out this gap right here from Tuesday's gap down, and we closed right around that gap down level just above the 35 EMA. IWM on Friday did close up 0.38%. RVX closed down 1.63%. And we did stay within the implied move on Wednesday and also on Friday. And then lastly, DIA. We did open the week at the very top of the implied move for the week. And I was definitely surprised about the price action in the Dow last week. So we opened with that gap up and then we consolidated back to the 35 EMA, kept this gap open here. So we closed it about halfway and then bounced, took it outside of the implied move, and we held above that 35 EMA to close out the week. Now, if you look at Stupid Willie right here, you could see that we have a bearish divergence. I'm going to take DIA to the 1 hour time frame here, and I'm going to pull up RSI. And RSI, we have a really interesting divergence here. So bearish divergence means we see higher highs in price and lower highs in RSI. So you could see a clear bearish divergence right here, like that, and right here. And the last time we saw a bearish divergence like that, this one is a divergence right here, but it's not the same as this one that we saw last week. This right here looks more like this one right here, where we did reach overbought and then made newer highs, but relative strength was falling. So what happened after this divergence is we took it back down underneath the 1 hour 200 moving average and all the way down to the 50-day moving average. So if this does play out and we do start trading down, 50-day moving average is sitting right here in the election gap, and we have this red gap right here and this green gap right here, and that would make a really great pullback target of about 430. All right, so let me take it back to the 30-minute time frame here. So we did make higher highs and we did make new all-time highs 3 days out of the week. We saw Monday and then Wednesday and Friday new all-time highs, and again that was on a bearish divergence and lower volume. So we'll see how that plays out if we see a pullback there. And we did close outside of the implied move for the week. I was actually betting that we would close underneath 448. With Thanksgiving there, I probably should not have taken that bet, but DIA closed up on Friday 0.52%, and we did not stay within the implied move. All right, that was a quick recap of last week. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love how I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. If you have any questions at all, leave me a comment. And if you nailed that trade because of something you learned here, consider giving back by clicking that thank you button below. And starting in SPY tomorrow, the implied move is between 599 and 606, and that is from options. The 30-day average volatility is quite a bit wider, 595 to 610, and the implied move on Tuesday's contract is between 598 and 607. And to the upside, the first level to look for is going to be all-time highs that we made on Friday. That is at 603.35. And then above that, we have uncharted territory. 606 is the top of the implied move, and 607 is the top of the implied move on Tuesday's contract. And then to the downside, we have the 35 EMA. We did see that as a support all last week. And if we do break underneath that, then the bottom of the implied move is 599 and 598 on Tuesday's contract. Now, I really do not like when the implied move and the 30-day average volatility are so wide apart. And I like to look for an additional strike, which is right in between the two. And for tomorrow, that might look like 597. We do see that as a support right here when we filled that gap from last Tuesday. So 597 is right in between the two, and that is something I might look to if we do drop tomorrow. And then underneath at the very bottom of the trading range for tomorrow, we do have the 30-minute 200 moving average. So the bottom of the trading range at 595 would likely be max pain for tomorrow, since we do have that 30-minute 200 moving average right here. And then SPX, the implied move for tomorrow is between 6,000 and 6,065. And that is from options. The 30-day average volatility, again, much wider, 6960 to 6100. And then on Tuesday's contract, 5990 to 6075. And to the upside, we do have all-time highs that we made on Friday. That is right here at 60.44 and 17 cents. And then if we get above that, then the top of the implied move is 60.65 and 60.75 on Tuesday's contract. So if we do trade up tomorrow, I would be looking to this spread right here. And to the downside, we have the 35 EMA. We did see that as support last week. And if we do break that 35 EMA tomorrow, then the bottom of the implied move is 6,000. 59.90 is the bottom of the implied move on Tuesday's contract. And then at the very bottom of the trading range tomorrow, we have the 30-minute 200 moving average. And again here, I don't like when the implied move and the 30-day average volatility are so wide and there's such a disconnect there. So I do like to find a strike that's in the middle somewhere, and 59.80 or 59.85 might be a strike that I look to if we do drop tomorrow. A little bit safer, especially when the two are not in agreement. All right, and then QQQ for tomorrow, the implied move is between 506 and 514, and that is from options. 30-day average volatility, 503 to 516, and the implied move on Tuesday's contract is 504 to 515. And to the upside, this 510 level, we did see some resistance there last week. We gapped up to around there, got pushed back down, saw it again, back down, dropped, and then we did close underneath it. So 510 would be the first area of resistance. And then if we do get above that, 514 is the top of the implied move. And then 515 is the implied move on Tuesday's contract. We did see a little bit of resistance around that 515 level. So if we do trade up tomorrow, I would be pretty comfortable taking 514, 515 bear call spreads. Right now, futures are down, and if we do start the day down, 35 EMA is right there, 30-minute 200 moving average, and those two levels are at a very critical point. I actually still have this gap in here, but that was closed out. So let me just fix that real fast. Okay, so 35 EMA and 30-minute 200 moving average, that is right around 507. If that breaks, the bottom of the implied move is at 506, 504 on Tuesday's contract, and 503 and 503 is the bottom of the trading range. So 504, 503 to me looks like that would be the strike that I would go towards, or the spread. I'm looking a little bit further down on the downside because we are so overbought here. And then underneath all of that, we do have the 1 hour 200 moving average to catch us if we do fall. That 1 hour 200 moving average was support right here. And I think this was NVIDIA earnings right here, and leading up to it, we did find support on that 1 hour. So that is QQQ, and then IWM. The implied move for tomorrow is between 239 and 245, and that is from options. And the 30-day average volatility is 236 to 248 and 238 to 246 on Tuesday's contract. To the upside, we did see a little bit of resistance right here around 243. And then if we do get above that, 245 is the top of the implied move, and that lines right up with the new all-time highs that we made last Monday. 246 is the implied move on Tuesday's contract, and that would be an awesome spread. I would definitely be eyeballing that if we do trade up tomorrow. And then to the downside, the 35 EMA. Let's go ahead and put that in there. There it is. So 35 EMA just underneath us. After we made those new all-time highs, we dropped back down to the 35 EMA, and we stayed right on that level and closed just a little bit above it to close the week. And if that level breaks, then the next place to look is going to be the bottom of the implied move, which is 239. We do have this gap right here, and that was from last Monday where we gapped up and then saw that push up to make all-time highs. We dropped back into that gap and closed it mostly out, but left a little bit open. So 238.75 is the bottom of that gap. So rounded up, it'd be 239. I would actually look to Tuesday's bottom of the implied move at 238 to be a little bit safer here. And then that 30-minute 200 moving average is at the bottom of the trading range tomorrow. So this trading range looks pretty fun for me. And then lastly, we have DIA. The implied move for the week is between 444 and 456. And the outer numbers here, I added the 30-day average volatility today in this video because it is $1 wider in each direction, and it does give us a little extra buffer. So 443 to 457. And to the upside, we do have the all-time highs that we made on Friday, and that is at 451.28. And then underneath us, we have the 35 EMA. At the very bottom of the implied move, we do have this up gap from last week. We opened last week with that up gap, came into it a little bit, bounced on the 35 EMA. This up gap is at the very bottom of our implied move, along with the 30-minute 200 moving average towards the end of the week. So that 30-minute 200 moving average is definitely pointing to these two strikes right here. And don't forget about that bearish divergence that we have to start the week. That also could take us down to that level as well. So there you have it, guys. Let's just see it from one more. All right, there you go. It's not so squished on the screen anymore. So there you have it, guys. Everything you need for tomorrow. Let's make some money, have fun, trade safe. Make sure you take profits when you're up, and I will see you guys tomorrow night.